Hey, is your business built to sell or just to survive? See, most entrepreneurs focus on growth, but are you building the right kind of business for your ideal exit? Whether you're aiming for a strategic sale, a scalable empire, or a lifestyle business that funds your freedom, your financial future depends on the decisions you make today. On today's episode with Profit with a Plan, I'm sitting down with Saul Cohen, an accountant, acquisition expert, and deal strategist. And he's here to break down how to position your business for maximum value, the key indicators buyers are looking for when evaluating the business, and why now is your biggest opportunity of our generation to buy a business before you even sell your own. So, if you're ready to stop thinking like an operator and start thinking like an investor, this episode is a must listen. So, listen to today's Profit with a Plan podcast and get the insights you need to maximize your business value and personal wealth. Hey entrepreneurs, are you working too hard for too little profit? Well, welcome to Profit with a Plan podcast, where we help you scale smarter, increase profitability, and build a business that's worth more, whether you keep it or you sell it. I'm Marcia Riner, business growth strategist and profit booster behind Infinite Profit. I've helped countless entrepreneurs to turn their businesses into highly profitable and sale-ready assets, so they enjoy more income now and a bigger payout later on. So join me for practical strategies, expert insights, and proven steps to make your business more profitable, more valuable, and built to last. By the way, today's episode is sponsored by Infinite Profit, where we don't just talk profit, we deliver it. But before we dive in, I've got something special for you. And if you're feeling like you're doing everything right, but you're still not seeing the results that you want, it might be time for a fresh perspective. That's why we're offering a free growth and marketing audit. Now, this is done independently all by yourself, but in just one powerful session, we'll uncover opportunities to drive real growth for your business. So if you're ready to make an impact, visit profitbooster.biz and get started. All right, let's jump into today's episode. Our guest today is Saul Cohen, strategic advisor for growth and smart exits. Saul is a seasoned accountant and acquisition strategist, helping entrepreneurs to scale, acquire, and exit businesses profitably. With over 100 successful acquisitions and experience at Price Cooper Waterhouse, no, PwC, BT, JP Morgan, EasyJet, and Tesco, he brings deep financial expertise across industries. Saul specializes in guiding business owners from daily operations to investor mindset, optimizing valuation and structuring businesses for long-term success. Whether you're planning an exit or looking to acquire, his strategic insights and creative approach make him the go-to expert in financial growth and smart deal making. Welcome, Saul. I appreciate you coming on the show today.
Thank you for having me on. I'm really looking forward to our chat.
Me too. Okay, so how in the world did you get into from accounting into business acquisition in that M&A kind of space?
Yeah, it's a great question. I to be honest with you, I became an accountant because I loved entrepreneurship. And I know that it sounds quite funny.
Right, because it's normally you like numbers and you want to hole up in a dark corner somewhere.
Yeah, yeah. And I'm literally the opposite end of that spectrum. I'm quite creative. I'm an entrepreneur at heart. I started my first business when I was at university. Um, I sold that business, loved the journey. We made all the biggest mistakes you can make. But it was great to do that while I was young. Um, and I just thought I was trying to work out what I really wanted to do. Um, and I thought that the best thing for me at that time would be to work with other business owners and see as many different types of businesses as I could. And that's actually what made me become an accountant. And I just thought, what better way to be adding value to society than working with the people who really do affect change in the world? And I truly believe that. I think that sort of successful entrepreneurs are the people who really change the world for the better. Um, and yeah, so I became an accountant. I was at PwC. I loved the work that I was doing. I loved working there. I thought it was a fantastic place to be, but I just felt a little bit detached from sort of working with the SMEs that I really wanted to be working with. It was much more corporate, and we're working with much bigger stakeholders. Um, and my dad, who was an entrepreneur himself, and had started his own business, was sort of forced to sell his business. He became ill and was forced to sell. And I just remember thinking it's such a shame he didn't have better advice earlier on in his career. And I just thought, you know what, maybe I should see if there are other entrepreneurs who have a similar problem. And I found that it was just something that was quite commonplace in that world. And I sort of moved into the SME world, and because of my background in risk management, and coming from PwC and seeing what good looks like, and working with banks and private equity houses and stuff, I almost fell into the acquisition space. I wanted to help people prepare for acquisition anyway. And the SME world moves really quickly, and so very quickly I'd suddenly racked up about 100 deals, which is an astonishing number. And now I'm approaching nearly double that.
Wow.
And so it's been a whirlwind, and I've loved it. And I think the reason why I love it is because I'm sort of cycled into the my original reason for being an accountant, which is sort of, I really feel like now I'm helping those business owners and helping them see the reward that they so deserve.
Well, it's funny how we have similar paths, coming from financial advisory in my space, and planning and everything, but watching both of my parents, who are business owners, exit their companies and leave a lot of money on the table. And
Yeah,
there's some really good advice that they could have gotten that would have changed the trajectory of our family had they
right.
had done a few things a little bit earlier on, or just made some better decisions. And so I love the fact that you saw this, right? And today's business owners, they don't see it because they birthed this baby, this business,
Yeah.
and they think, oh, you know, I'm not going to think about selling until I get one foot out the door, or, oh, when I sell, I want, 10 times EBITDA, right? When in fact they're getting one time, if that's it. But the
Right.
decisions that they make throughout the life of the business can really truly impact the valuation and their ability to exit on their own terms.
Yeah, absolutely.
I love
Um,
it.
I mean, what's actually, I'll just add to that, is that the thing that I always say is that no one teaches anyone how to be an entrepreneur,
Of course
right?
not.
People teach you how to be an accountant. People will teach you how to do banking or anything else. Every other profession, you're taught what to do. But when it comes to being an entrepreneur, it's just down to you to work out what needs to be done and fumble around, and most entrepreneurs do a fantastic job of that.
And
But
fumbling.
if Yeah, right, and just working it out.
Yeah.
But the shame is that there's so much that they don't know that they don't know.
Exactly. Which is
And
which is why I came up with the podcast, and we're
right,
6 years in now, because there's so much information out there that business owners who live in this vacuum or silo really truly need. So I
yeah,
love it. But these are really great ideas and philosophies that we both share. So I think that that's fantastic. But let's circle back and talk about, when we're thinking about that business. And I always love that phrase, you got to start with the end in mind, right? And
mm,
when we're positioning our company and our business for that maximum valuation, how do we do that really? I mean, we can hope and pray and think that we're going to have everything in place, but there's a lot of moving parts.
yeah. There are, and I think the truth is that the step number one is to appreciate that it is hard, um, and it's not for everyone.
Mm,
And when I say that, I mean it's not for all business owners. Um, some business owners, the best example I've got of this is I use it all the time. Is we worked with a client who they used to write software for banks, and it was a fantastic business, but they had a single client. And
Mm,
as a result of that, the business was not saleable.
right.
Used to make £1 million a year in profit. You know, really, really good business. And we sort of said, you know, look, if what you want for the business is to grow this business into something that you can sell, probably could be, you know, multi-million-pound business. You know, you could probably sell to other banks. And they just knew that they didn't want to invest in that level of infrastructure.
Mm,
And what they did instead was they took their money that they were earning really good profits and they built a massive property empire. And that was their retirement plan, right?
got it.
Um, and I think step one is actually to be conscious about the business that you're building,
Sure.
and the journey that you're actually on, and appreciate if you're in this game to build a lifestyle business, that's absolutely fine. There's no shame in that. You can have really successful lifestyle businesses, but your exit plan is slightly different. And if you're
Significantly different.
yeah, right. And if you're gonna be able to sell anything in the business, it might just be, you know, like a customer bank or some of the assets that you've built. But
Mhm.
really, the tangible value is going to be in the cash that you're generating,
Mm,
over the lifetime of your business. And if you're on the other end of the spectrum where you're sort of on that sort of scale up journey and you're really trying to build a business into an asset in of its own right, um, then you know there are going to be painful moments, and there's going to be times where you're going to choose to invest big sums of money into this business in building systems and cultures and processes and all of that good stuff to reduce the risk portfolio for a potential investor. Um,
right.
and so I think step number one, is to be conscious about the decisions that you're making and be conscious about the implications of your decisions and sort of say, yes, I just want a really good lifestyle business that pays me loads of money and gives me loads of flexibility, and that's fine. You know, that you can still be a really successful entrepreneur and have that, or you can choose to go the other route, which is, you know, I just want to build. I love building, and I
Mhm.
think by nature most entrepreneurs are drawn to
Like to
that
build.
because they love the idea of creating and building and whatever, and that's fine. But it does mean that, you know, the decisions they make are different.
Exactly. I love in the introduction we talked about what kind of business are you creating here? Are you creating, rarely are we having the kind of businesses that we pass down to generations anymore, because the kids
Yeah,
don't want it or they're going in different directions. So you need to look at really what is that business you're doing? Like you said, is it lifestyle? Is it a growth company? Does it have more than one customer? Is it heavily weighted on my shoulders to perform everything? And I think that when we got into business, we decided, hey, I'm really good at this thing, right? And then we mistakenly wrap a business around it. But I think when we wrap that business around it, that doesn't mean you're stuck in that
right.
one form, original form of that business or second version of it, that you can evolve and create the business that can be sale worthy. If you think early enough and you make the proper plans and decisions, as you just suggested, to get going.
Yeah, absolutely. As I say, it's just about that planning and you know, being conscious about the journey you're on.
I love it. I love it. So, what are some of the indicators that buyers are looking for today that maybe we want to consider if that's an option for us in our current business model and whether we need to change to evolve into that? So, what are they looking for?
Um, well, look, I mean, ultimately in the SME space, what what a buyer's going to be looking for is future cash flows,
Mm,
right?
honey.
They want right they want future positive cash flows. Well, I hope it's positive. They want future positive cash flows, and they want certainty around those cash flows,
Mm,
right? And it literally it's everything comes under one of those two brackets. the valuation is built around those two brackets, right? We take the profit and then we add a multiple, which is basically the cash flow and then the risk and then the risk assessment from an investor's point of view.
Mm.
And everything that we do to build our business is around those two brackets, right? So either we're increasing the cash generating potential of the business, or we're decreasing the risk of the business and increasing the stability of the business, right? We're always doing one of those two things. So those are the two fundamental pillars, really. So it's the cash generated and stability of those cash flows.
What a simplified explanation of
Thanks.
how to make your business valuable. And it's not simple to do because there's, many strategies under each one of those pillars that could really leverage the growth in the cash flow that you're going to produce, or to drastically reduce the risk on it. There's many, many, many different strategies you can have on it. But the simplified view that you just gave us, that it's one of two, was probably one of the best versions of the valuation process that I've ever heard. And I've been talking about this for a long time. So this
Thank you.
is really, really, really great. But hang on just a second, because I want listeners to understand really and take that in. And while you're taking it in, if you are enjoying this, don't forget to hit follow and leave a review. We would really appreciate your help. But thinking about the valuation process in it, really, it's how you make those decisions, right? In directing your company. Are your podcast guest appearances leading to real business, or are you just hoping that listeners will take action? With the Profit Booster Podcast Monetization Hub, we turn your interviews into lead generating machines so that you capture, nurture, and convert listeners into paying clients. So stop leaving money on the table and get started today at profitboosterpod.com.
Yeah. I mean, as you say, right? So for me, I think that when most people come to sell the business, the biggest stumbling block is the certainty of cash flow rather than the cash flow itself. I think that most people who've built a successful business, there is good positive cash flow in that business. They might not necessarily have built it to the point where private equity are interested. They may have, and that's great, but they might be I think most businesses are in that sort of bracket, just a bit below that private equity interest. And
somebody said something like 70% of today's businesses are in that zone of not available for private equity, but still a very, interesting and opportunistic company to take advantage of.
Yeah, I mean, I didn't know that statistic, but it makes perfect sense to me.
Well,
Yeah,
statistics are just as good as someone throwing them out, right?
right. Yeah, and and to be honest with you, it's really important that those businesses are bought, right? Because it speaks to what we were saying before around we have a generational opportunity with boomers retiring. We've got a massive transfer of wealth about to happen.
Yeah.
And
it's so much easier to buy an existing working business than it is to start your own.
Yeah, absolutely.
Why did we ever, right?
I mean, I often tell people that the only value in starting your own business is the person that you become to get to, right? Because otherwise, just buy your own because it's so much
It's a major
easier.
headache.
Yeah. And it comes with different headaches, but at least it's more comfortable headaches because you if you've done it right, you've now got resources to be able to fix the problems.
Exactly.
Yeah, so I think it's that risk piece, right? And entrepreneurs often downplay the risk because they downplay how much of a value they are and how special and unique they are, because often it's them, and we all downplay our own strengths, but also because often all their friends are also entrepreneurs, and that's all they see, and they just assume everyone's like that, and the truth is it's not true.
Right.
And it's really hard. And the most valuable of those businesses in that bracket are the ones that are able to take that sort of entrepreneurial stardust and sprinkle it through the company. um, yeah, and
I like
and they
that.
do that through.
Entrepreneurial stardust. That's a good phrase.
Yeah,
But you know what? It is important because I was talking with one of my colleagues the other day, and we were talking about businesses that the opportunity right now, right? With, like you said, the baby boomers exiting. There's a lot of these, 70% of these businesses are ripe and ready to go, but they don't have the magic, the stardust, that
yeah,
entrepreneurial stardust that we younger, I'd like to think I'm younger in at least my mind, business owners that have that entrepreneurial drive that can take an existing business and just sparkle or sprinkle that dust on it and just send it in a positive trajectory where the current business owner was just kind of sitting back going, I'm comfortable, I'm good.
yeah. And to be honest, a lot of our clients are doing that, right? And they're hungry and they're driven, and they're, you know, when the when you've got when you've got a sort of young, hungry, sensible investor coming in to buy a business, it's fantastic because, as you say, if nothing else, it's just a third party who's not emotionally attached to the business,
Not
and
yet.
that, right? Yeah, not yet. And they're making decisions just looking from the outside in, and so they're approaching problems in a fresh way.
Mm,
Um, and if nothing else, that might be all it is, but it's enough to just sort of release the tension and allow the business to fly. And a lot of
mm,
my clients are seeing that at the moment. um, and they are sort of wrapping up and building a group of maybe like three or four of these businesses, putting them
yeah.
together, and looking at the solutions and thinking in a way that the previous owners didn't. And yeah, it's I suppose that's where innovation is, right? Because you're looking at it from a fresh perspective, and yeah, it's great.
I think that this is actually a fantastic time to be looking at businesses. And I love the idea of building that portfolio, right? You've got this one business, maybe it's tapped out for you or it's comfortable for you, and maybe you've got a little bit of equity in the business that you might want to invest into another company that's similar or complementary or running parallel with your current company, but the opportunity to
Yeah,
buy a business in this market is fantastic, right?
yeah. I mean, I think yeah, our generation, we live in a generation which is, it's been fraught with, volatility and lots of different risks and stuff, but there are really amazing opportunities that we've been presented with as well. And to me, this coupled with like this AI revolution and everything that's going on, and the ability to look at a plethora of really successful businesses and now have additional technological resources to apply into those businesses. To me, it's the opportunity of our generation. And I think that, those of us who do that in the best way will be sort of, the multimillionaires, the people who are, transferring the wealth to the next generation. Yeah, those are the people who will succeed in our generation. Yeah.
So how do we, since you brought it up, how do we incorporate some of that technology that's available and the new AI world into our business to do what is really going to drive the value of the company, which is increase the cash flow or to reduce the risk? So where does
Yeah.
that AI fit in?
So to me, I think, well, actually, it's currently doing two jobs. Um, I think that I know lots of people who are using AI to sort of increase sales and push sales to people. I think particularly in the B2B world, that's a
Mhm,
very short-term play. Um, I think that people buy people.
mhm,
And
agree.
I think actually the automation and the AI is going to push for a renewed thing of I want connection.
Mm,
a renewed drive of I want connection. And I think that the people who are in the long term going to succeed in that sort of sales, grow the business sort of arena are going to be the people who are sort of utilizing automation to allow them to have more connection and more quality connection with other human beings.
right.
Right?
Because you're right. People buy from people, right?
Yeah.
The AI makes the process of connecting the people and the conversation maybe a little bit better, but still nobody wants to buy from an ATM, right?
No. And I think we will probably, I mean, unless the metaverse becomes a thing, I think we will probably go back to this idea of, meeting face to face and having, proper sales conversations and
Mm,
in a face to face setting rather than Zooms.
right.
Um, but yeah, I mean, that yes, as I say, I think it will be in sort of that if we split it into those two pillars from the, increasing cash flow perspective, I think it's going to be about increasing the quality of our human interaction.
Mm,
From the de-risking of the business perspective, I think I think AI is going to play a huge part over there. I think it's going to be able to help us standardize. I mean, automation already does help us standardize the quality of our output to a level that we would never have been able to do without automation. And I think AI is going to take that to the next level. Um, my concern, or the thing that I'm not really certain about, is what that's going to do to culture in a
yeah.
business. Because if I go back to that, what I said before around, the magic dust, the magic entrepreneurial dust, the way in which that is disseminated in an organization, in my experience, has always been through the culture that's bred in the organization. And the more that we are acting in a sort of more automated sense and not you know working from home, I know it's a bit controversial to say this, the more we're working from home, cultures are being affected in my view. And I think from a value perspective, it means that there is less of that entrepreneurial dust disseminated in the business. And
Do you
I
think,
am, yeah, so I'm
I was
not
going
sure how AI will play with that.
so do you think culture really plays in the valuation of the company?
It's interesting because I think that there are lots of intangible intangibles. So there are assets in your business that don't sit on your balance sheet
Mm.
that I think, how everyone always says, like, to be in private equity, you need to be able to have a sniff test of a business. To me, it's those things, right? Is the things that a seasoned investor, he or she walks into the business and they instantly feel this place is going somewhere.
Right.
Um, and
And that's culture often,
yeah,
right?
right. And you have a culture of creating assets or being out on social media, and we have a culture of selling, whatever it is, it's culture. Um, and
Yes.
yeah, I think that when
So that's a
people,
that's a soft asset, right? Is that what we would consider that? The
it's the
intangible
softest.
intangible is a soft
Yeah,
asset, maybe?
yeah. Let's call it that. That's probably a more technical term. Uh, I mean, look, if we said before, right? People buy people.
Right.
Um, yeah, and investors actually are no different, right? They're buying the way the business feels, um, and
And the way the business runs and the people that are inside the business, because they're often not going to come in and often tear it apart and pull the pieces and fire everybody. They want to keep that energy and flow that the people that are working there have the relationships with the customers. They know where the skeletons are in the closet. They've got all the nuances that has gotten the business there so far. And
yeah,
I think that's a valuable asset when selling the business as well. So
no, no,
having that culture sprinkled
absolutely.
around it is important.
I mean, the way I always look at it is, it's like, imagine you're buying phones, right? And you've got these two phones. You've got one is like the iPhone, and the other one is like this
Samsung.
Chinese off-brand, and essentially both of them do exactly the same thing. They can operate exactly the same level, but you're willing to pay more for the iPhone. And there's a reason for that, because the iPhone makes you feel a certain way. It's
That is
packaged a certain way. It's,
that is.
right. The wrapper is completely different. And it's the same thing in a business, right? You can have two businesses on paper, they look exactly the same, but one, the due diligence is smooth. The business is just ready for exit. They knew exactly what you were going to ask for before you asked for it. Their culture is amazing. It makes you feel like you're going to be the king of the hill. That business is going to sell for a higher number
Mhm.
than the absolutely same business on paper somewhere else, because the wrapper matters.
Ah. Ah, so let me ask you a very scary question for you.
Sure.
What kind of percentage of the deal does that wrapper make, right? I said I warned you, Scary, and we're not going to hold you to that number. But in reality, when we're looking at valuations and when we're trying to boost our valuation, years before we get there, how
Mm,
much time and energy and effort do we want to spend in that space for the return, right? So if I'm going to spend, a lot of time and energy and a lot of assets or resources to develop that, what's my ROI going to be on that development?
yeah. I mean, look, I always say that it's not in my interest. It's never in my interest to tell a client that their business is worth more. It's always in my interest to tell them that it's worth less, because I can
Course.
prepare them for the worst case, whatever it is, right? Um, so, but
I mean, are
look,
we
I
talking
think there's two
10%? Are we
elements.
talking
There's two ele
25%? Are we talking
there's two
3?
elements. Yeah. Look, there's two elements here, right? The first element is the valuation, and the second element is how likely the deal is for it to be successful.
Mm.
Um, I mean, 80% of deals fail, 50% of deals that hit heads of terms never complete. It's quite difficult to for an acquisition to happen.
Sure.
Um, when we Once you've had a valuation, you've accepted it. I work with sort of a fantastic sell side consultant in the UK. He always says, and I really subscribe for this, it's 80% heart, 20% paper once you get to heads of terms, right? Whether the
Okay,
deal
okay.
completes, yeah,
So it's
once you
kind
get
of
to
the
heads of
icing
terms.
on the cake. It's not necessarily the cake itself with the flour and the sugar and the baking powder and everything you made to make that cake, but it's the decorations on the top that make it. Is that kind of
Yeah, I mean, the problem is, and this is why I was hesitant before, is because I think that when you're before heads of terms, it's impossible to articulate because no one's ever going to say it. I reckon it's probably as high as 30% of valuation is
wow,
before
okay.
it's, yeah,
When
because
done,
it's,
when done well, when everything else is stacked and organized, right?
yeah. And the reason
Got
why it's impossible, because at the end of the day, valuations are always dictated on the market.
Sure,
And
it's based on the
right,
buyer.
and no investor is ever going to tell you that they're willing to pay more for a business because it made them feel good, right? Because that would make them look like a terrible investor. Um, but practically, in terms of, if I look at the deals and we compare like for like in the past 200 deals that we've seen, why the valuation is different here and there, it it is those things.
Wow.
And yeah, and when you look at the statistics over the course of everything, no one will ever admit it, but that's what we see.
Well, thank you, Saul. This was really good. I warned you. I said this is going to be a difficult question to answer because
Sure.
you couldn't answer, but you gave us the insight that said, okay, when everything else is super solid, you've got all the numbers, it all makes sense, the valuation, the dollar, the cash flow decision, and the risk decision is made. Now the final piece that pushes them over the edge is all the extra stuff, right?
Yeah.
So I love it. I love it.
Cool.
All right. So this has been a really great conversation, and I'm so glad we got to do this. Where can listeners find out more about you?
Okay, so I've got a book coming out in the next month or so. So it's all about exits and how to exit and increase your valuation. So I'm sure there's going to be tons of value if you've enjoyed listening to this conversation. I'm sure you're going to love the book. I've got a wait list. Anyone who's on the wait list will have sort of advanced access to the book. We're going to get some deals out to some really great offers for everyone on the wait list as well. So I will drop a link for the wait list. And yeah, I think that's probably going to be the best way. And then you can get advanced access to that book.
Excellent. I'm so glad. Congratulations on the book. As an author,
Thank
author
you.
of three, I know what the laboring a book was. It's a great journey, and it's like you find your voice and you want to do more. So
Yeah.
I'm sure there'll be more coming in behind it. But this is great. So perfect. So where's your business website, Saul?
Yeah, I'll drop a link to it. So we're called The Expert Eye. Yeah, so we're based in the UK.
You worked
Yeah,
internationally, obviously, right?
we do. Yeah, so I've worked with clients in the US, in a couple in the Middle East as well, some in Europe. So yeah, it's all different types, all different sizes. I mean, exit is exit at the end of the day, and some things do always stay the same. But yeah, we are based in the UK. It's called The Expert Eye, and we help people exit for increased
Awesome.
valuations.
Perfect. Well, all the links will be in the podcast notes, so listeners, make sure you grab them there and get on the list for his book. It's going to be very, very exciting coming out. And don't wait. For my biggest takeaway when it comes to exiting your business is don't wait till you're close to exiting, because number one, they look back 3 years at least, but it takes a while to implement the strategies that can really increase the value and allow you to exit on your terms with the best and the highest valuation you can get. And it's not left to a reaction that occurs because maybe something happened or you got sick or the economy changed or whatever. You're in a better position all the way around if you start thinking about your exit earlier, like way earlier, like the day you open your company is not early enough. So yeah, okay, I'll climb off my soapbox on this exit strategy, but it is so important to think on it. So go get in line for Saul's book. I know you're gonna love it. All right. Thanks for tuning in today. I hope you picked up some valuable insights and actionable ideas that will help your business be more profitable now and increase the valuation later on. And as I mentioned earlier, it might be time for a fresh perspective on your business. And that's why we're offering a free growth and marketing audit. And in just one powerful session, we'll uncover opportunities that can drive real growth for your business. And if you're ready to make an impact and turn this year into a real go-getter for you, then go visit profitbooster.biz and get started. Now, we don't want you to miss any future shows, so please subscribe to the channel you're listening to right now. And you'll find Profit with a Plan on any of your favorite podcast platforms. We're looking forward to more great profitable strategies on next week's shows. So until then, make your plans and profit with them. Thanks so much, Saul.
Thank you.